Hey traders, it's Houston from the Trading Edge. Just wanted to post another quick video and follow up on a post or a video I posted yesterday with regards to a setup I shared yesterday called the Pullback setup. Today I took a couple of pullback trades and had a very good session, and just wanted to update you on what the setup looked like today and some of the opportunities, and just again hope that you're taking advantage of this current market volatility and liquidity. It's not always going to be this good, and when times are good like this, I hope you're trading on the right side of price action and really filling up your piggy bank. So just to quickly review before we get into the price action today, let's review the setup. It's a very straightforward pullback setup. What we're looking for is a run up followed by a pullback. So the run up indicates a strong momentum or strong drive upwards. So the market direction is telling us that it wants to go up. And of course this can work on both sides, whether you're long or short. We then see a pullback to again, it could be to a significant Fibonacci level or to a mid-band if you're a mid-band trader, like a Keltner channel or a Bollinger Band. And then we're looking to go long again on the resumption of this trend. So as I said in my previous post, I would be looking to get long, excuse me for the wrong arrows there, looking to get long on the resumption of the uptrend, and I would hide my stop below this previous low. Immediate target would be the previous high, and I would take off profits or take off the whole thing depending on the market action and just how much I had pocketed in that trade. Likewise, it works the same way to go bearish or to go short. So we look for a very strong aggressive run to the downside, indicating once again strong momentum and sellers pushing the market down. We then wait for a pullback, which would give us the opportunity to get short now at a discount and then ride that trend downwards. Once again, I'd be looking to get short about here and then hiding my stop somewhere at below or above the previous low. Once again, taking profits right about here, taking it all off, or taking a partial, again depending on the size of my position and just market action and where I am in my trading day. Alright, so let's see how it played out in today's session. So just a quick review. In the after hours, in the pre-market hours, we had a really strong uptrend or upward push, which indicated very strong strength. So my bias at the beginning of the day was already to be long. And until this previous bottom gets taken out, then my dominant bias is to go long. Yes, you can scalp and make some money on the short side, and I did take some shorts today that were profitable, but certainly my targets there are nowhere as far as if I were to try to go long here. And you can see the pullbacks work very effectively in these markets. And again, this really works on any time frame, right? So for instance here today, if you had drawn a trend line down here, you could get long on a trend break, something like right about here. Oops. Get long here and perhaps hide your stops below the previous lows. And again, you wouldn't take necessarily all these trend breaks. You really want to try to find a good risk to reward ratio to make it worthwhile. If you're risking a lot, if you're getting a bad fill, let's say you're getting filled up here, it may not be worth the risk, especially if you're trying to aim for the previous highs of the session. Now typically what I do is I don't trade until 10 o'clock Eastern. I like to draw my opening ranges, or if I do trade at the open, I'll just trade a small, either a small position, or I'll go for a very quick scalp because I'm looking for an opening range. So typically I'll draw the opening range from the start of the session around 8:30 or 9 o'clock to 10 o'clock, and that'll be my opening range. So I draw the highs of the session, or the opening range highs. You can see the opening range high was here at 16,573 on the YM, and the lows of the opening range were down here at 16,523. Alright, so a pullback trade, as we described before, we're trying to target this opening range high, or in this case that previous pivot high. So here's another example of a pivot trade. here is a good example of a trend breaking down. And I'll zoom in a bit closer so you can see that. We can see a beautiful wedge break. Plenty of time to get long here. So I could have gotten long at this position here, and I could hide my stop below the previous low. So if I got filled somewhere around here for say 15, let's give us a little bit of margin of error, 16,532, I could hide my stop or maybe around 1520. So for a 12 or 13 point risk, I have a targeted upside here of 573, so 40 type, maybe even a 40 point target with about a 15 point risk. So very good risk to reward ratio there. Now, as I mentioned before, I don't start trading until after 10, so let me show you the ones that I ended up taking today. So the trade that I took today, I took a few, but again, all pullback trades. One that I took, that's one of my favorites, was described similar to one I did yesterday. Was here. Upon the break of this trend line, I got long in here. I did not get a good fill, and I got filled around 16,550, and I hit my stops below this area here. And so for this one, I took on a half position just because I could not get a great fill. Just based upon the risk to reward ratio is basically a 1-to-1. So from 16,550, from 550 to 574, it's only about 20 points, and I was also risking 20 points because I was hiding my stops underneath the previous low here. All right. So I took on a half position. But in this case, you had plenty of time to get filled and perhaps even get a better fill. As it broke out here, I actually didn't get filled up until up here. I chased it a bit to 550. But certainly, if you were a little bit more conservative or more patient, you could have gotten even a better entry over here, just based on the breakout here. You can see the edge that formed right there. You could have got a better fill and improved your risk to reward ratio. You could have maybe got filled around here at 46, and you'd only be risking about 15 ticks or maybe 15, 16 ticks for a 20 plus point reward. So that's what I took. I took profits up in this area again at the top here, again just based on the target. And as I mentioned before, the opportunity for this pullback trade also works very, very well, exceptionally well on the downside as well. In fact, on the downside, it's actually easier to take some of these because momentum on the downside seems to be stronger at this time period. So as you can see here, once this trend starts to the downside, it breaks all previous lows. So I'll zoom out for a second here, and you'll see that once the downtrend starts, it is very, very strong. And so this run here tells us that that some of these factors have changed. So especially once this breaks below the previous session low, then certainly the trend of the market is now certainly bearish. And at this point here, you really need to be looking at short-only trades. You could even just draw it by using a simple trend line. You can see here that the trend is down just based upon drawing the peaks of these previous the peaks on the previous pivots. So a very, very good trade would be something like this, where you're waiting for the pullback. Right, so let's zoom in a bit here. You're waiting for a pullback. So in this example here, let's draw it in. We can draw a very good pullback here, right? And you'd be looking to get short at this level here. So on the break of that pullback, you look to be getting short and hiding your stops above that previous pivot high. Okay? So let me scroll in a bit so you can see that better. And if you're more conservative, and this would have been kind of hard to get filled because you'd have to be really on the ball here and perhaps risk chasing the market a bit. If you're a little more conservative, then you had a second chance to get short here. So this little pullback to this level gave you a second shorting opportunity. Okay. So if I zoom in a bit further here, it's a little bit more apparent. You'll see here, this again would have been a little bit hard to catch unless you were really on the ball and were able to get filled in these 2-3 minutes, in this kind of 2-3 minutes that the uptrend had broken down. But here is this kind of second chance to get short, kind of the second mouse gets the cheese kind of setup. Here for you Fibonacci traders, or perhaps you pullback traders who trade pullbacks on to a mid-band like a Bollinger or Keltner channel, here is your really good entry to get filled, right? So if I draw on a fib grid, you can see I had to pull back to the 61% retracement, and that gave me plenty of opportunity to get short here to ride that downtrend, right? So another great way to kind of judge price action and to draw targets is to use something like a Fibonacci extension tool. So by drawing this extension tool from the previous high to a pivot low to your pivot high here, you'll see that in today's market it just traded technically perfect, right? So what you're really looking for in this case here, I would call this a one wave. So we talked yesterday about the different waves. This is a wave 1. This would be wave 2 here. Let's do this another way. So this is a wave. This is wave 1. Right. This would be wave 2 here, a corrective wave. Okay. Wave 2. And here is your wave 3, and you'll see just how perfect this market traded. It went right to the 100% extension at 16,383, right there to the dot. So you'll see if I draw in this line here, you see that it's traded technically perfect. It could not get much better than that from a technical perspective, right? So this last wave here was a wave 3 trade. It was a wave 3, and that ran exactly the same length as our previous wave 1. So that's all I have for today. Hope you had a great trading session. If you have any questions, you know where to find me. Email me at houston@thetradingedge.org. Take care and happy trading.